All the Bitcoin bulls are out in force now. The I told you so's, we're going to the moon. Nobody is actually getting out. None of the Bitcoin hodlers are cashing out anything. They're just buying more. And when they want to cash out, who are they going to cash out to? There's no new buyers coming in to sell to. So the market is going to implode. And I think when this thing cracks, it's going to implode very quickly.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
The incoming head of the Bank of Japan comes out and says everything is great, no need to change policy. We dodged a bullet of deflation, everything is great, right? This 4% inflation we got now, well, it's a good thing because it means that we no longer have to worry about the dreaded deflation. We now can breathe a collective sigh of relief that the cost of living is going up, and we don't have to worry that the things that we need might get less expensive. We can all sleep soundly knowing that everything we need to buy will be more expensive when we wake up, right? That this is basically what these idiots are expecting us to believe. But when the announcement came out, the dollar immediately shot up. Why? Because the yen went down. And the weakness in the yen kind of dragged down all the other currencies. Why was the yen weak? Well, because the Bank of Japan's not going to hike rates. They're not going to slow down QE. And so, yes, that is negative for the yen. And so the yen went down. And of course, the opposite side of that is the dollar goes up. It's, a seesaw. One goes down, the other has to go up, right? That's how it works in foreign exchange. Well, the minute the dollar goes up, everybody starts selling gold. And so gold dumped. About $20, right? Back below 2000, even got below 1990, I think, on the lows. Now, why? Think about this for a second. The Bank of Japan, a major central bank, is okay with inflation, thinks it's good and wants it to continue and is going to do nothing about it. Interest rates are going to stay negative. Not only are real rates negative in Japan, but you got nominal rates negative in Japan too, right? I mean, it's crazy. That is good for gold. That is bullish. The more central banks around the world and the more governments are going to consign their populations to perpetual inflation, that their currency is going to lose value. Every year, they're going to be taxed by inflation. You create an incentive to get rid of that currency. You create an incentive to own gold instead of that currency. So now you have all these people in Japan, and there's a lot of money in Japan. It's a very wealthy country. They have a lot of savings. The Bank of Japan is telling Japanese savers, you are going to lose wealth every single year. If you stay in the yen, you are guaranteed to lose. We are not going to fight inflation. We are going to create inflation. That is an incentive for the Japanese to convert their yen into real money, gold, to preserve their purchasing power. So the more central banks that are acting recklessly and are accepting high inflation as a way of life, that is bullish for gold. So what was announced by the Bank of Japan was positive for gold. It's just that these gold traders, they don't get that. They just trade off these algorithms, dollar up, gold down. They don't really care, right? They don't know what they're doing. They're on autopilot. But that simply gives smart people the opportunity to buy. Because I think any dip below 2,000, that's your buy. 2,000 is kind of like the bargain basement right now. You get a chance to buy gold below 2,000, you do it. The question is, how much longer is gold going to give you that opportunity? As I am recording this podcast now on Tuesday night, gold is back at 2005. So we're back above. We're up about $12 today. So we recovered the loss from Monday on those Bank of Japan comments. Now, I want to talk a little bit, though, about fool's gold, Bitcoin. People think I'm ignoring it because it keeps going up and I haven't talked about it as much. Well, now Bitcoin is back above 30,000. As I'm recording the podcast right now, let me check. It's at 30,338. So significantly above the low. I think it got down around 16,000. I forget the exact low. But obviously, we've not quite doubled, maybe 80% up from that low. And of course, all the Bitcoin bulls are out in force now. The I told you so's, we're going to the moon. I was watching or listening. I wasn't watching because I was in my golf cart and I was listening to the radio. And I've got CNBC on there on XM Sirius. And Mike Novogratz comes on, perma bull, Bitcoin pumper, Mike Novogratz, who was, bullish all the way down. And he was saying that 30,000 was the bottom, and then 25,000, then 20,000, right, as it kept falling. And he's on CNBC. And instead of kind of challenging him for all of his bad forecasts and how high, he was predicting it, they were just patting him on the back like, hey, you were right. Look, Bitcoin is rallying it. It's back above 30,000. You were right the whole time. It was nothing but softballs from Joe Quernin and all the other Bitcoin pumpers on CNBC, right, who are just, buttering this guy up with, these softball questions. And they're just, this is great. Bull market, the crypto winter is over. Buy Bitcoin. And, I'm listening to this guy, and a couple of things that he said actually, I think, were noteworthy. Not so much because, of what he said, but what he inadvertently admitted without actually realizing that it was negative. So one of the things he admitted to was that the buying that he's seen that has lifted Bitcoin back above 30,000 has come pretty much entirely from the existing Bitcoin community. The hodlers have just bought more, and maybe other hodlers are just refraining from selling. And so the people who already own Bitcoin have decided to buy more. It's not that there's new adoption. And he admitted that the institutions are not there, right? The institutional money that everybody thought was going to come in is MIA, right? The institutions aren't buying. So there's no new money coming in. It's the same money. It's the same people, which tells you that the rally is unsustainable. Because in order to keep a Ponzi going or a pyramid or chain letter, however you want to describe it, you need new people. You need new money coming in, new buyers. If the only people who are buying are the people who are already in, well, then nobody is actually getting out. None of the Bitcoin hodlers are cashing out anything. They're just buying more. And when they want to cash out, who are they going to cash out to? There's no new buyers coming in to sell to. So the market is going to implode. And I think when this thing cracks, it's going to implode very quickly because you don't have the new buyers that maybe had been there in previous rallies. They're not there. Now, Novogratz was acting like this was a good thing. It shows how much confidence the Bitcoiners have in Bitcoin that they're willing to buy more, right? He's making lemonade out of lemons. And of course, the CNBC guys just, oh yeah, that's, they didn't challenge him on how ridiculous this is. They just accept this BS that it's good. But then the other thing that Novogratz admitted, that, the CNBC just, gives him a pass on this, is that he mentioned that the high prices, the fact that it's gone up is helping, because to the extent that people who own Bitcoin can convince their friends to buy it too, that it's a lot easier when the market is going up. So he said when the market is up and there's a big rally, now all the Bitcoiners can tell their friends how exciting it is and how much money they're making and kind of get them to get in on it. Which in other words is he's admitting, well, it's all pump and dump. We just need the market to go up so that we can sucker people into buying because they think it's going to keep going up. Right? So it's just all this gigantic pump getting ready for a dump. And this is kind of what he admitted to without actually admitting to it. But again, you just got to listen to what he's saying. He obviously knows this is going on. But again, CNBC completely ignores the strength in gold and instead keeps focusing on what's happening in fool's gold. The Bitcoin rally is completely unsustainable, and that's why CNBC is covering it. The gold rally is just getting started, is very sustainable, and of course, CNBC completely ignores it.